welcome and good morning. You're here today at our senior breakfast in September, beautiful fall morning. And today our guest speaker is Chief Assessor for the city, Marc Levye, who is going to have a lot of great questions. So Marc, I'd like to just introduce you to the audience and say thank you so much. Today's breakfast will be televised, so the folks at home will be able to call and ask questions. Could you just give them a number that they can call to ask you any questions that you may be able to answer?
Hi, it's 617-625-6600, extension 3100. I'd be happy to answer any questions and help anyone who is confused by the many applications we have out there.
Thank you, Marc. And you'll be having an opportunity to hear all the great answers that Marc has. He's done a great job of helping us with the senior tax work-off program to get residential exemptions up there. He's doing a fantastic job. We're so lucky to be living here with such great city employees. So we'll be right back. Listen to the great things that Marc has to say.
Thank you for having us, Cindy. Again, my name is Marc Levye. I'm the Chief Tax Assessor. I've been with the city since 1991. I've been the Chief Tax Assessor since 2009. With me also in the corner trying to hide is Carol Haley, our Administrative Assistant, who actually knows a lot more about the statutory exemptions than I do, but I'm going to make the presentation. Carol may jump in if I give out incorrect information. Before we get to the statutory exemptions that are being passed around, I want to talk briefly about the residential exemption. You know, we understand a lot of seniors are on a fixed income. A lot of you do not have a lot of disposable income. So you want to try to take advantage of as many opportunities that the law affords that you may be eligible for. And before we get to the statutory exemptions again, which is being passed around, one of the most important basic things you want to make sure you have, if you're a Somerville homeowner and you live in the home, is that you get the residential exemption. Louder, okay. The mic's not going to amplify, I told. It was just for the camera. So I will try to speak up as loud as I can. Is everyone familiar with the residential exemption? Yeah. Okay, good. Again, it's a tax break for owner occupants. There are no age requirements. There are no income requirements. You simply have to make Somerville your residence. You obviously have to own the home and live in it. You do not have to file every year on that. The eligibility date for the residential exemption is the January 1st prior to the beginning of the fiscal year. So we are in fiscal 2016, which began July 1st. It's going to end June 30th of next year. That means you had to own and occupy your property on January 1st. Now this is shown on your tax bill. Best place to find it is on the third and fourth quarter tax bill. And I want to just state momentarily, I'm giving you a lot of information today. A lot of it can be confusing. It can be a little bit of overload. So don't feel like you have to memorize everything. We're always available in the office for questions. We have a staff that is more than happy to help you with the answers to some of these questions. So just do the best you can with what I'm presenting now. The residential exemption does not have to be filed annually. Periodically, about every 5 years, we'll send out a renewal notice to have people recertify their eligibility. We don't want to give out exemptions if people are no longer eligible. You are on your honor system, though. If you do move off the property before you get a renewal notice, you should notify us, just like you would tell the feds if you were moving and you were reporting a different address on your 1040 or your state return. At this point, I want to turn to the one other thing about the residential exemption. One popular misconception is that it's 35% off of your value. It is not off of your value. What we do is determine an average residential value in the city, and whatever that amount is, that's what everyone gets. It's a flat amount. Last year, it was close to a $200,000 reduction in value, which saved you about $2,500 in taxes. So we calculate the average residential value in the city, and then that's the amount that everyone gets. It's not 35% off your individual value. Everyone has a handout now. We're going to turn to the statutory exemptions. The statutory exemptions are itemized in the Mass General laws. They're for seniors, they're for veterans, blind, widows, and widowers. And again, you certainly want to take advantage of what we have to offer. The eligibility date is different than the residential exemption. The eligibility date on the statutory exemptions is July 1. So for fiscal 16, you had to qualify as of July 1 relative to age and income requirements. The first one on the list here is known as our elderly 17D. And I'm just reading across the top. Do you want me to hold that? Is that better? I don't think this is on. Is it? Okay, well, the 17D is for seniors 70 and older. There are no income limits, and the asset limit is $58,000 a year. Now you can get up to $253. That's a state set amount. And on all of these exemptions that I'm reviewing now, they can be allowed up to double. What does that mean? That means if your taxes go up $200 and you were getting the $253 17D clause, you would get $453. You'd get the base amount, the $253, and then another $200 because your taxes went up $200, which would ensure that your taxes would not be any higher than they were in the previous year. Now, the one that's even better than the 17D, if you look down at the next to the last item, the elderly 41C, this one is a much better deal if you qualify. That's being the key phrase there. This is for those 65 and older as of July 1. The income limits are a little over $20,000 if you're single. If you're married, a little over $30,000. The asset limit's a little over $40,000 if you're single, and if you're married, close to $56,000. But in this case, the base amount is $1,000. So you much more want to go for the 41C if you do qualify for that exemption. I'm going to go back up to the top where there are some other 17D clauses for widows and widowers if you're a surviving spouse. The asset limit and the base amounts are the same. The asset limit being $58,000. The widows, the amount, again, $253. We also have what's known as a hardship abatement. The hardship, we don't get many of these applications per year. These are for folks who are in particularly dire circumstances. There are three basic qualifications. You're supposed to be a senior. You're supposed to have an infirmity of some sort, a serious illness, and your income is supposed to be pretty much at the poverty level. The Board of Assessors have a lot of flexibility with the hardship exemption, though. If you think you might qualify, you can make an application. The board will review it. The amount can vary. We could give you as little as a few $100s. We could give you several $1,000s if that's what your tax bill is. But again, we don't see too many of those. We have various kinds of veterans applications. You can see the clauses there. There's a clause 22, 22B, 22C, and 22E. The one that we see most is the basic 22, which is probably about 90% of the veterans applications we get are clause 22. You have to have a 10% service disability or a Purple Heart. There are no income and asset limits. The base amount is $400. And again, that can be allowed up to double. If your taxes, after all exemptions applied, were going up $800, then you would get the $400 base amount plus an additional $400, again, to ensure that your taxes are no higher than they were in the previous year. Now, let me just back up momentarily. Oh, no, it applies to the residential exemption as well. Both the residential exemption and all the statutories have a 3-month application window. Once you get your January 1 bill, you actually have until April 1st. You have 3 months to file this application. So there's a lot of time if you forget. And once you get your January 1 bill, that should be a reminder. Am I getting the residential exemption? Did I remember to file my statutory exemption? If I didn't, then you still have time. You still have all the way till April 1 to still make that application to our office. There's also a blind exemption known as Clause 37A. You have to get a yearly blind certificate from the, I'm sorry, Cal? from the Commission of the Blind. That exemption, again, no income limits, no asset limits, a $500 base amount on the Clause 37A. We also have the tax deferral, the Clause 41A. This is one that we've had on the books for some time. The way it works is that you pay no taxes at all, but you enter into an agreement with the city to have your taxes deferred until such time as you sell the house or if you pass away. Then you would have to pay that back, or your estate would have to pay that back at an interest rate of 4% a year. Now, I want to point out that we just cut this interest rate in half this past year. It used to be 8%. It's now down to 4%, so it's a much better deal. We also increased the income limit from, I think it was 40,000 to 56,000. So there's a lot more flexibility. And I know Alderman Needigang was very interested in pushing through the changes we made, as well as the administration. And it's been pointed out that there's a number of communities, like Weston, I believe is one, and Quincy, where there are many more seniors taking advantage of the tax deferral. So it's something that folks may want to consider. Again, you pay no taxes. You have to file the application each year with our board. But upon selling the house or you're passing, the estate would have to pay back. There's also the senior work-off, which I'm sure most, if not all of you know about, that Cindy's office administers. This is a program that allows seniors, and the definition is very liberal here. You only have to be over 60. You have to be a Somerville resident. And what Cindy's office will do is match you up with another office in City Hall or some other city department that needs some work based on your particular skill set. You can earn up to $1,000 credit off your property taxes. That could help a lot. There's also a little wrinkle that some folks may not know about, that if you are incapacitated or unable to do that work, you can have a substitute. You could have a family member, you could have a friend, someone could do that work for you. You're paid at the minimum wage, and I think that comes out to somewhere between 80 to 100 hours to earn up to that $1,000 credit. Now, we do give our phone number on the bottom, second line from the bottom, 617-625-6600, extension 3100, because again, I don't expect everyone to memorize this. There's not going to be a quiz, so you should all feel free to contact our office whenever you have questions. You can call us, you can come in, you can fax us, you can email us, whatever works for you. We do have folks available also to help with filling out these applications if you have no one else that can help you and you're not sure you're understanding the questions. Last thing I want to talk about, recently, well, not so recently, several years ago, the voters of Somerville passed the Community Preservation Act, which you've probably all noticed on your tax bill. It's a surcharge. It's in addition to all other taxes that you pay. It does show on the bill. It's 1.5% of what your taxes are after all other deductions are applied. If you're getting a statutory exemption, if you're getting a residential exemption. So before that 1.5% goes on, all the other exemptions are considered. There is the opportunity, though, also as of April 1, to come forward if you meet income guidelines and age guidelines. They're more liberal if you're a senior, to have that CPA tax wiped out entirely. And again, you can contact our office. We do have information. We also have some additional handouts. We don't want to give you too much that Carol has off to the side that will show you what the income requirements are and the age requirements are to get your CPA surcharge wiped out completely. That is something you do have to file for annually. It's getting tougher and tougher as you're seeing what the houses are selling for. We're as surprised as you are when we see some of the prices that come into our office. I don't even want to mention, I'm not going to mention any specific properties, but we'll see a simple house in an average location in the city that years ago may have sold for $350 or $400. We're now seeing that it's selling, for example, for 600 or 700,000. And if you drove by that house, you'd be shaking your head like I am, saying, I can't believe that that house just sold for $600,000 or $700,000. So it's making it tougher and tougher for all the taxpayers, but particularly the seniors. One other little note that's important is that the city is trying to add more commercial value all the time, because the more commercial value we have, sorry about that, the more commercial value we have, the more the tax liability can be shifted to the commercial sector. So that's something that the city is focusing on. Assembly Square, Assembly Row is certainly something that helps. I know there's other ramifications when we get commercial development, but strictly from a tax perspective, the more commercial value we have, the less the tax liability is going to be on the residential sector.
So this is when you get your pen and paper, all the great and exciting trips that we have coming up. Can you imagine we're already talking about January of 2016? Get your pen and paper. We'll be right back. So we're back again with Marc Levye, who is the Chief Assessor for the city. Thank you so much, Marc. And you're going to find these questions and answers very interesting.
Covered a lot of information. I'd be happy to try to answer any questions that folks may have. Anyone? Yes? First and foremost, your house, your primary residence is excluded. So you don't have to count your house. If you own other property, you would have to count that. Your automobiles, your bank accounts, not the interest, but the bank accounts you have, the principal amount, savings, checking, IRAs, bonds, stocks. I'm sorry? They would, yes. I'm sorry, I didn't. The question was, would annuities be included in that too? The answer is yes. They would. Any other questions? Yes.
On the senior workforce, how many hours would be required for that?
It's up to earning 1,000 at the minimum wage. The question was how many hours on the senior work-off. So you can earn up to 1,000 at the minimum wage, and I think that works out to about 80 to 100 hours.
Yeah.
Yes.
I'm already getting the widow's exemption.
Mhm.
What is the 41C?
Well, the 41C, again, is age 65 or older. The asset and income limits are listed there, and the amount is $1,000, the base amount. The widows is paying you a lot less. So
Can you get both? Can you get both?
you cannot get both. The question, right, you get whichever one is more lucrative to you. So you may want to contact our office and see if you might qualify for the 41C, because if you,
Went up and I thought I'm getting the 253.
right,
Better, but I'd rather get the other one.
If you qualify. You can see what the widows has no income limits, whereas the 41C does. And I also want to point out that the base amount on the 41C went up from $750 to $1,000. So that's even a higher amount going into fiscal 2016.
We have a question here, Mark.
Okay.
The bill that we got now, I got a bill
Mhm.
that I had to present before December. I'm always mixed up on that because you said that we had up to April to present. Is that the same thing? The form, not the bill, but the form to present it as a resident of Somerville.
We have a few things. The question was about what forms are now out in the mail and how they relate to the tax cycle, I believe. Let me just briefly remind folks that we're a quarterly tax billing community. That means we send out 4 tax bills per year. You get a bill in July and you get one in October, and those are known as the preliminary tax bill. They're based on the previous year's taxes. So they're not going to show whether the exemptions are there, but if you were getting them in the previous year, they're figured into the calculation. The actual bill is the one that's going to itemize right on the bill your statutory exemption. It's going to itemize the residential exemption. It's going to show you what the actual tax rate, the actual taxes, and the actual assessment are for the entire fiscal year. Now, the two things that are out right now in the mail, in fact, they've been out for a while, was the recertification on the residential exemption. I mentioned that you don't have to file annually, but every so often, about a 5-year cycle, we're going to mail you a reminder that it's time for your residential exemption to be recertified. Your statutory exemption, I think you mentioned the green form that you received? Yellow, okay. The yellow form and any of the others are mailed out annually by our clerical staff. They went out mid-August. And that's the one, as well as the residential exemption, that you have until April 1. You have until April 1 on both of those to make application.
It says in the letter that I have to present it before December 1st.
That I believe,
It's on the application, why that, I don't know why it's on.
So can she talk to you privately?
Yeah, the
Yeah.
deadline is April first.
yeah.
So you could talk to Carol.
One slight bit of confusion on that is that in order to show the statutory exemption and the residential exemption on your third quarter bill, we ask that you try to get it in sooner. But legally, you have until April 1. So if you miss out on the January 1 tax bill, you still have plenty of time. You still have until April 1st to make application. And you would get all of that money retroactively. It would all show as a credit. Or you might even have money coming back if you've already paid your April 1 tax bill. Other questions? Yes.
Hi,
Hi.
I have a husband that's veteran,
Mhm.
and he's owner to the same house I'm on, and I'm 68. Can we both file? He's getting the veteran,
Mhm.
10%.
Mhm.
But what about me as being the owner with him?
Right,
Am I eligible for any of these?
right.
So he would get residential anyways, right?
The residential exemption, sure, yes.
And so veteran status with the residential, if he's getting 10% of military?
But could she qualify for an elderly if he's getting the veterans as well?
Husband and wife,
Yes.
We're both owners.
One or the other, right?
Yeah. So again,
or elderly.
we would, if you qualified for both, we'd put you on the one that was more lucrative for you.
Oh, okay. Okay, no, thank you. I didn't.
The question again was, can you qualify for both? The answer is no, only the one that's going to give you more money.
Oh, okay.
The residential exemption is above and beyond all this, though. That you get no matter what, okay? So take the residential exemption out of the statutory equation. You get the full amount on the residential exemption, and then you can qualify for one statutory in addition to the residential exemption. You can also qualify, independent of those two, for the CPA exemption. So they're kind of like 3 separate categories. Yes?
What if the property's on the trust? What kind of protections do you get in
I'm sorry, could you repeat that?
the trust?
Trust.
Trust.
What if the property's on
Yes.
the trust, are there any deductions?
Good question. I was hoping no one would ask that, because if we're all not confused already, we will be now. Yes. Years ago, I'm going to try to give you the short version, there was a Mass Supreme Court case involving the city of Medford and someone who was trying to get a statutory exemption from the Medford assessors. And it went all the way to the Mass Supreme Court. And what they said was that in order for you to qualify for an exemption, and this would apply to the residential exemption and the statutory, you have to be at least a trustee. Okay? Now, I know this is a huge issue for a lot of seniors when they're contemplating down the road, maybe a nursing home, and how they protect their assets. There are many lawyers out there, elder law attorneys who you should talk to, who can give you great advice, who have found ways to protect your assets if you did go into a nursing home, but also ensure that you will continue to get your local exemption from a board of assessors. The short version is you need to remain a trustee, or in the property deed that transfers the property into a trust, reserve yourself a life estate with the right to occupy. If you don't do one or the other, you're no longer going to qualify for the residential exemption or a statutory exemption. So. Anyone else? Other questions? Okay. Well, thank you very much.
So I just want to show you a quick little insert about our bowling league. We're looking for new players. If you want to bowl, get some exercise, watch this. I bet you'll enjoy it.
Surprise, everybody. My name's Kim Moss. I'm the director of the Ralph and Jenny Center located at 9 New Washington Street in Somerville. Today we have a bunch of our seniors that come down to my center daily. As you can see, we have some raised garden beds out back here, and they're all out here and they're going to pick. We have different kinds of tomatoes. We got some basil. We got some onions. We got green peppers. We got a little bit of everything. So I'll let them proceed on picking. And if anybody wants to say anything about what they do, we did have Mimi down here, which used a bunch of our ingredients 2 weeks ago on a Monday, and we made flatbread pizzas with all the ingredients that we pulled out of the garden. What did you think about the day you were here and we pulled out the pizzas?
Oh, it was wonderful. We had a wonderful time. We did exercise. We went upstairs and listened to the music.
Do you like the garden being out here? Do you make use of it?
I love the garden. I come every morning when I come in. I like to water it so it doesn't die away. So I volunteered my help.
Yeah, it's nice. The fresh vegetables. I love vegetables. It's a nice dinner. Come on down, join us. We're here almost every day. If not, we will be.
There we go.
I like the parsley for my fish, for the eggs. Thank you very much.
And this is Jean Coakley. She's going to get some green tomatoes.
So I can make fried green tomatoes. Delicious. Yum. Oh.
Romeo, what are you going to do with that?
I'm going to make salad.
They all work very hard. They come out, they clean it up, they take home whatever they can use, and sometimes they bring stuff back to me here. So those are onions.
Yes, I like the onions because I'm using this in making pancit.
Very nice, very nice. This garden came from Vilma. Vilma works with the gardening over at Holland Street. They put the raised beds in. I'm not sure how many years ago. I've been using them for the last 2 years, and it's due to the volunteers that continue as Joanne waters it, Vilma waters it, Ellen Ellis, and some other people on the volunteer. And I have my seniors come out with me daily. We pick, we de-weed, we clean it up, and we water it to keep it as useful as we can for the whole summer. If you'd like to get involved, you can call 617-625-6600, extension 2300, and just tell them you'd like to speak to the director of the Ralph and Jenny Center, Kim, and they will transfer you down to my line. Or most people do know where the center is located, and they're welcome at any time. And this is Maureen. As you can see, she has picked herself a nice bowl. What are you going to do with all this, Maureen?
I'm going to eat it.
Are you going to make a salad with
Yes,
it?
I am.
Very good.
Would you like some?
Sure.
All right, I'll bring you in some. Fresh vegetables, fresh from the garden. Come on down. You'll have a great time and have some salad.
I hope that Mark answered all of your questions today. And of course, if he didn't, you can always reach him at the assessor's office up at City Hall. He's on the first floor right across on the welcome desk. Thank you for being here, and we look forward to seeing you next month.